I think that was a big realization for me as a trader as well. When I was first starting out, I would focus on these small penny stocks. Let me see if I can find one real quick. Like CEI, for example, Chamber Energy. I've been trading 7 years, and for as long as I've been around, CEI has always been around, always. This is at 50 cent, 50 pennies. When I was first starting out, interested in penny stocks like this, as I'm sure a lot of people out there were at first interested in penny stocks. You just get hooked on the idea you can buy so many shares with little money, and then you get unrealistic expectations. But at the time, you don't realize the unrealistic expectations. And you think to yourself, man, I can buy 10,000 shares of this stock here at 50 cent or 1 penny. And if it runs up $1, that's a good return. I'm rich. That's a good amount of money. It's unrealistic expectations. And a lot of times, you'll see with these penny stocks, nothing really ever happens with them. They get hot maybe a couple times throughout the year. There's a lot of bag holders. You see them crumble and fall apart super fast, and the moves on them are just not great. I mean, look at this move here. It ran from 60 pennies. This run up here, it ran up to 66 cents. So in total, this stock ran up 6 pennies. It looks like a good move, but that's not a good return really. That's 6 pennies. Now, if you had 100,000 shares running up 6 cents like that, yeah, that's a good return. But keep in mind, anytime you have to buy more of something, you're only increasing your risk. So this had a 6 penny run up and you have 100,000 shares. That's a good return, but this could have went the other way as well, and that could have been a bad loss. That's when I started to see and branch out. Look at the stock like DAWN here. Yeah, it's a bit more expensive, but at $13, this stock ran up to $16. That's a $3 per share run up. So I would be saying to myself, well, all I would really need is maybe 500 shares, maybe 300 shares. And if I can just get a slice of that, maybe $1 out of that $3 run up, that's still a good little return for the day. And then I started to gradually see too stocks like Redbox. Look at this bad boy. All week or the past few weeks, Redbox has been squeezing up. This stock ran from $6. Now it's hitting $18. That's a huge run up and a lot of amazing opportunity. And even in this day here, it's got a nice range from $14.75 up to a high here of $18. That's a $3 range on a stock like this. Look at AERC, another example. This stock, the last few weeks, again, it's been up and in play. This one ran from $2.50. In one day, it ran up to $6. And then the next day here from $4, it squeezed all the way up to $14. This one day right here ran up from $4 to $14. That's a $10 per share run up. Now, even with this at $4, you could still buy 1,000 shares, and total at $4 buying 1,000 shares, that's a $4,000 investment. Even if you were to say from the bottom all the way to the top there, and it's still unrealistic expectations, but a $10 move like that from 10:30 up until 2:30, so in 4 hours this stock ran up $10 a share. That's potential of $10,000 in just 4 hours. And all I'm looking for is just a slice of this entire move here, even if it's only $1 or $2. And then you have to counter in too, every person out here, we are all in our own unique situation and in life, and we all have our different beliefs. I've seen people get discouraged and beat themselves up because they've sold too soon and the stock would continue to run up like this, and they would trigger revenge trading and chase after the stock and ultimately take a loss on it. What I'm trying to get across here with you guys, there's a lot more opportunity out here, and you're going to see a lot more opportunity and greater opportunity in these stocks that are above $5 a share. Stay away from those penny stocks, because all that's in those penny stocks, like CEI for example, this is the only penny stock I can think of at the moment. That's why I keep bringing it up. All that's in on these penny stocks are bag holders. You got long-term investors, and then you go off on social media, see what other people are saying about these stocks, and people are just bitter because they've been holding on to something like this, tying up their money for years or months, and it just keeps trickling down lower, and they don't want to admit defeat. So any criticism, they're bashing or trolling just simply because they're pissed off because they got screwed over and they fell victim to another penny stock. It happens all the time, and we all get sucked into these penny stocks immediately when we're new. I would avoid these at all costs because we all get hooked on the idea that, hey, at 50 cents, I only have $2,000 to trade with. You start thinking to yourself, okay, now I can buy 1,000 shares, but then you start getting unrealistic expectations of it moving up 50 cents, $1. When a stock down here at 50 pennies, a 50 cent move on this in the financial world, that's a big move for a stock like this. It just doubled in value if it moves up 50 cent from 50 cent here. It just doubled in value, and that's a 50% run up, even with it being in the tight little range that it is today, from 47 pennies up here to 50 pennies. It's down almost 9% on the day, and it's only down, what is that, 4 pennies, tenths of a penny. Percentage wise, that's a big move. And don't get discouraged because these stocks like AERC here is up at $13. Don't say to yourself, I can't afford something like this because I only have $2,000 and I can only buy 150 shares of a stock like this. Well, look at it, how much it moved, man. It moved from $8.50. It ran up to $18. That's a $10 run up. So your lousy 125 shares, if you would have played it from $8.50 to $18, and nobody is ever gonna perfectly ride out or nail a trade perfectly at the bottom and hold it all the way to the top. Nobody's ever going to be able to do that. From a move like that with 125 shares, that's like well over $1,000. That's a huge return. That's a 50% return on your little $2,000 account or so, you know? Always pay attention to stocks above $5 a share, and don't get scared away by the cost. Focus on how volatile they are. You can easily manage your risk versus reward, and you don't have to buy as much as you do with those penny stocks.